It's about that time of day again. Back in the action once again. Hope you guys had a great weekend. Great to be back here with you always on this video newsletter. Of course, it's time to get back to work. We got lots of great setups to talk about tonight on the video newsletter. Of course, it's Monday evening. It's September the 9th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, in case you're here for the first time, please be aware I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. My job's very important this evening. My job tonight is to help you guys identify the best levels of support and resistance, the best entries and exit locations for tomorrow, and most importantly, to help you avoid some of those common mistakes, right, that'll trap you on the wrong side of the market for tomorrow. That's Tuesday's trading session. In the video tonight, we're going to cover some oil, some S&P, some Nasdaq, some gold, and some euro. I'm going to jump into oil first this evening. The black gold, the Texas tea, oil get a nice boost here today, but we finished with a trading range. And anytime we see a range in the chart, we have a very easy plan for tomorrow morning's trading session. Let's jump into that chart here first here on crude oil here for this evening. As you can see here, crude oil, of course, had a nice big bull run going higher today. But, of course, you'll notice they kind of stalled out here just before the measured move ended up going sideways on the screen. Sideways markets, range-bound markets, balance markets, these are very, very important clues. We know we have an overall bullishness to this market. We also know the market's going sideways, and that sideways movement is most likely because of this big overhead, resistance level overhead, that measured move. So we know the buyers have control right now, but we definitely don't want to be buying into this area of resistance. So I'm looking for a level of support that I can use to be buying off support instead of buying into resistance. And of course, what I'm going to do is I'm going to mark up my highs, mark up my lows, and I'm looking for a nice pullback right now off the low of that channel. Looking for a pullback setup right now on the oil. It's a bull market into a trading range, and you'll notice I'm going to use a combination of that channel along with those range expansions. Now, of course, I've got a couple different entry patterns I'm looking for on that pullback, and we'll go into a lot more detail as far as those specific entry setups in tonight's video. If the market runs higher here, can I sell this market? I can. I've got one very specific reversal pattern. We'll dig into all the details tonight here on the video newsletter. So if you're an oil trader like we are, definitely make sure you stay tuned for more on that. Over on the S&P, S&P is very similar to the oil in one sense. It's a bull market, of course, into a trading range right now. What do ranges tell us? Ranges tell us to buy low, sell high, and avoid the middle, right? I want to sell high, I want to buy low, and I want to stay out of that middle. So I'm looking to buy it as it goes lower. I'm looking to sell it as it goes higher. Because the market is overall bullish right now, I've got very specific entry patterns for buying it as it pulls back, for selling it. Remember, selling it will be against the trend. So we'll talk about what the reversal pattern will look like to sell off of that high. And then what about a breakout? What would a breakout look like on the S&P? Yeah, we're going to break that down into small bite-sized pieces. We'll talk about buying low. We'll talk about selling high. We'll also talk about breakouts here on the S&P. There's one big clue on that S&P, and that is that recent strong bear move lower. We're going to talk about why that's important tonight on the video. Over on the Nasdaq, Nasdaq is in a very similar situation, not quite as beat up and ugly as the S&P right now, but you can definitely see, though, we are bullish right into that trading range. Range-bound markets, balance markets, sideways markets, they tell us all the same thing, right? Buy low, sell high, avoid the middle. I want to buy low down here. I want to sell high up here. I want to avoid that middle, right? But again, one very, very important clue here, and that is that strong move going lower right now. I want to be a buyer, but I don't want to buy right here. I don't want to buy right here. I'm expecting to see possibly another leg lower here to buy this thing back up. So I'm watching for a very specific entry setup right now in the Nasdaq. We're going to break that down. And of course, if we do run higher, can I sell off the high? Absolutely. You can sell off the high, but it requires that very specific reversal pattern. And of course, we will look for a potential breakout. What if a market breaks higher? Where's my target waiting overhead? We'll talk about some targets waiting up overhead and how to trade those breakouts on the Nasdaq tonight. Over on the gold, the yellow metal, gold is relatively easy. We got a big old wedge forming right now on gold right now. Wedges, of course, are very, very simple trading strategies. Most important thing right now, though, for a wedge is going to be buying low, selling high, and staying out of the middle of this wedge. You'll notice this wedge is bearish, so of course I've got to be a little bit more careful about buying off the low. We'll talk about that trend reversal pattern on the gold here tonight. And then obviously, right, how do we sell off of that high? Selling off that high, I want to be a seller right up off that high as well. So buying low, selling high, avoiding the middle. Is there potential for reversal, potential for a breakout? Absolutely, right? What if we make a run going lower? What if we make a run going higher? What does a breakout look like? How do we trade those breakouts? We'll talk all about that stuff tonight on the gold. And then of course over on the euro is probably the most challenging out of all of them. You can definitely tell there's a big announcement coming up later this week. We'll talk about the calendar here in just a moment. But what do we know about the euro right now? We know the euro is basically a range-bound market overall. There is a bullishness to it overall here. You'll notice it's kind of turned into a bit of a expanding triangle, right? Inverted triangle. And, you know, it's a range. So anytime we have ranges, we always know we want to buy low. We want to sell high. We want to try to stay away from the middle, right? Avoid the middle, buy low, sell high. That's going to be the general strategy on the euro. But there's one thing here right now, and that is this strong move higher. That strong move higher, you'll notice I've got this kind of channel laid out here. And I'll tell you, I'm looking for a way to trade a failure off that channel back into that range right now. Again, it's a range. I want to be a seller up here, but with all these buyers pushing the market higher here today, I'm expecting we're going to see some buyers coming in off the low of that channel. And honestly, I'm trying to sell into those stop losses to short this sucker back down into that range. I'm going to go into a lot more detail on exactly what I'm looking for that. There's one very particular pattern on the sell side, and then of course, right, buying underneath the range tomorrow as well. So we're going to dive into all the details on the euro. I've got everything lined up: euro, gold, Nasdaq, S&P, crude oil. We are locked and loaded here to have a great old time together tonight on this video newsletter. Before we jump in though, I just want to make sure I remind you that right before I publish this video on our YouTube channel, I send out an email to everybody on our mailing list, and I want to make sure that you get that email. And it's very, very easy to get registered for our mailing list. All I need is your name, your email address, and then hit that subscribe now button. Now, don't forget, when you subscribe to join the mailing list, I'm going to send you an email, right, to your inbox. I need you to check that email, because inside that email is going to be a verification link along with a bunch of free great resources so you and I can start working together every evening on this nightly newsletter. So don't delay. Make sure you never miss another great video newsletter. Join our mailing list. All I need is your name, your email address. Hit that subscribe now button. And again, when you subscribe to the mailing list, your job is not over yet. You've got to go in, check your email. Sometimes that welcome email gets stuck in your spam filter. So if you don't see it in your inbox, check your spam folder. It may be hanging out in there somewhere. I need you to verify your inbox. There's a verification link in there. Click that verification link, and that will give me the go-ahead to start sending you emails every evening when our nightly newsletter goes live. That way you have the first crack at it every evening when the video goes posted on our YouTube channel. Now, one more thing here for you guys before we jump in. I have a question for you. If you could go back and turn back time, if you could start over again, if you could go back and start brand new again, redo your trading career, what are the lessons that were the most important that you learned along the way? What would you do differently this time around? Such an important question for you. In the comment section below, down in the comment section below, if you could go back and do it again, what would you do differently? What would you avoid this time around? and what would you really try to focus more of your energy on this time around? Guys, I'm always asking for feedback because you know what? Every time you post something down there in the comments section, I read it, I use it to make this video even better. So I'm always asking for your feedback, what you love, what you hate about this video. But more importantly, if you could go back and do it again, if you could start over again in your trading career, what would you do differently this time around? What would you do more of? What would you do less of, right? I would love to hear from you. I know what I would do differently. I want to know what you would do differently. Post those comments in the comments section below. And one more thing, right? One more thing. While you're down in the comments section, if you tune in every evening and watch this video newsletter, hit that thumbs up button for me. I really appreciate it because every time you hit that thumbs up button, YouTube rewards me by exposing this video to other traders. It's probably why you're watching this video right now, right? You found me on YouTube most likely as well. Every time you hit that thumbs up button, it'll expose this video to more great people out there, more new traders who need to learn these lessons as well. So two things here tonight. First of all, right, join the mailing list. Second thing, drop me some comments. Give me your feedback. What would you do over? And while you're down there, right, hit that thumbs up button. I really appreciate all that time here. And don't forget, if you have any questions, right, maybe the comment section's not for you. If you don't want to drop me a comment in the comment section below, pick up the phone. Call that toll-free phone number in the upper right-hand corner because I'm always standing by here to help you guys out 24/7, 365. Don't be afraid to call that toll-free phone number. Use that live support tool in the upper right-hand corner, and I'll be standing by to answer that phone call, answer all your questions. A lot of you guys have called recently about our free trading class, about a free pass to our trade room, about the best brokers right now for futures trading. So don't be afraid to call the office and ask any important questions. I'll be here to answer the call and help you get the information you need to keep moving forward in your career. In the meantime, though, let's get to work here tonight. Checking out that calendar here for tomorrow. Tomorrow, of course, is Tuesday, September the 10th, right? This could be a busy week here we have here this week. Of course, tomorrow, of course, is the 10th. Tomorrow, there's not a lot of news on the schedule. It does look like the big report tomorrow will be that JOLTS report at 10 a.m. Eastern Time. I would expect that to be the big market-moving event tomorrow morning, so keep your eyes and ears open tomorrow. Now, of course, we'll be in our trade room tomorrow morning at 8 o'clock Eastern Time. So we'll get a front row seat there for that JOLTS report tomorrow morning. But 10 o'clock is the big kind of meat and potatoes tomorrow, that job openings, layoffs, and transfer survey right at 10 o'clock Eastern Time tomorrow. Then, of course, we go into Wednesday's trading session. Wednesday, of course, is, well, it's not your typical Wednesday. It is, of course, the anniversary of September 11th. I don't think that'll have too big of an impact on the financial markets, but I'm sure people will be a little bit distracted that day. It is kind of a sentimental time of the year, right, for a lot of Americans here. I'm sure a lot of people all over the world, right, that kind of remember that every week. So we got that on Wednesday as well. Wednesday, of course, we got the PPI number in the morning, so gold and euro will definitely be active, and of course the oil report at 10:30, right, for oil traders. Thursday, don't forget, is your ECB announcement on Thursday morning. So as I mentioned earlier, euro is kind of weird here right now, most likely because of that ECB announcement on Thursday morning. That'll be just before we start at 8 o'clock Eastern Time on Thursday morning. And then, of course, on Friday, right? Friday, big retail sales number here on Friday morning, and that'll help us round off this week. You'll also notice what we don't have this week, and that is any Fed speakers, right? There's no Fed speakers, no Fed speakers, no Fed speakers. You know why? Because next week is the FOMC meeting announcement, and so, of course, we're inside that blackout, right? That blackout period the week before the announcement. So no Fed speakers here this week, so hopefully there'll be a little bit of a calming effect on that. We saw a lot of big impulsive moves last week because of all the Fed speakers. No Fed speakers this week. We got the ECB on Thursday. Wednesday, of course, again, is September 11th, right? Shouldn't have too much of an impact on the markets. We'll obviously play it by ear as we go. And tomorrow we got that JOLTS report at 10 a.m. Eastern Time. So pretty busy week here ahead of us. We'll be in our trade room like clockwork every day this week, Monday through Friday, 8 o'clock Eastern Time. I want to see you there with me because, of course, we'll prep the strategy together tonight, and then tomorrow, right, 8 o'clock Eastern Time, we'll trade the strategy together. Jumping in here first tonight, we got crude, S&P, Nasdaq, gold, and euro. Let's start off first here on the oil. Oil is, of course, a bull market here tonight into a trading range. Range-bound markets are pretty straightforward. They tell me to buy low, sell high, avoid the middle, and focus on failures, right? Focus on failures. Now, this particular range has a bullish bias to it, which definitely gives the edge to the buyers. And ultimately, I want to buy at levels of support below the trading range. So what I do is I find my range, and I use that range to identify key levels of support. And I've got key levels of support at 52, at 27, at 57.01. Those are range expansion support levels. So this area right here is a great support area. Again, where you get a bull market into a range. I'm looking for a level of support to buy below the range because, of course, ranges tell me to buy low, sell high. It's a bull market. I want to be a buyer, and I can find that buy zone or that battle zone down around that 57.15, 57.20 area. But that's not the only level of support that you can see in this chart. If you put a trend line at the highs, bring it down to that low right now, make that midline, right? We talked about this last week. Get that midline to fit in there. And with that midline right smack in the middle, right, that fits like a glove. Look where that is, right about the same spot here. So a great spot here to be a buyer on the oil. So we know exactly where we want to be buying here on a pullback. But what would be the best pattern to be a buyer on that pullback? Well, you know, one of the things I always teach my clients is to anticipate whether or not we'll be above or below the moving average. For example, right, market is bullish. We're going higher here into that range. Let's now say we pull back down to the low of that channel, down into that buy zone. What's going to happen is that moving average comes over. Right now, the sellers are going to start taking action. They're going to try to sell off that moving average. Right? A lot of times it looks like this, where the market goes below the moving average. The sellers now try to sell into it, and as soon as they fail, the market will shoot right back up because, again, the trend is overall bullish. So like I said earlier, anytime I see a trading range, I'm always looking to focus on failures. I want to be a buyer, so what I'll do is I'll let the market pull back, get that moving average coming over, try to get those sellers to commit to selling off the moving average. Because once I see those sellers commit off the moving average, yeah, now I know exactly where their stops are, right? Now I know where their pain starts. Now I know where those sellers are going to start to have to make a difficult decision, right? They've got to either add more or get out. And because this market is bullish overall, we assume there's going to be a lot of stops sitting up here, and those buyers, right, should be able to buy right into those stop losses. This, of course, is one of my favorite setups in a range-bound market. It's called a failure setup, right? That failure pattern, again, is just simply sellers trying to sell off that moving average, and I'm buying into their failure. Then from there, don't forget, these oftentimes pull right back to that moving average. So after you get your failure, keep an eye out for that pullback. Now you can see back here again, this was a failure pattern, but look where they pulled back right to it, right? They shortly thereafter pull right back. So keep your eyes out for that failure into pullback combination, right? See how that pattern looks on the left-hand side? That's pretty much the same idea as we're looking for on the pullback. Again, I've got my trend line coming up off that low. I've got my channel area, right? I got my range levels. So all we need right now is to get that pullback. Get those sellers now to try to sell off of that moving average, right? And then from there, it's failure, right, into pullback as we go back higher. Now, you might be wondering, at what point would a pullback turn into a reversal, right? I mean, at what point, if we're not going to be selling this pullback right now, it's just not a reliable pullback, at what point could we start being a seller? Well, it would require what I call a 1, 2, 3 reversal. It will start off with a strong move down. That's 1. Then a pull back to the moving average. That's 2. Then a strong move off the moving average. That's 3. That's the trick to a reversal, right? You don't want to try to sell off the first pullback because, again, a lot of times those will fail and the market will just slam right back up to retest those highs again. What you want to do is you want to get that strong move down, right? Watch closely here to see if those sellers can hold. If they can hold off that moving average now and really jump off that moving average, wonderful. Now we know the bears have control. We'll mark up that low, go up to the high, and find that what I call a hidden channel, right? I'm going to draw off of these two new lows, and then that's going to give me that'll give me the trend line to use. Then I'll pop that trend line on at the highs there, and now I know exactly where I want to be a seller, right? I want to sell off the top of that channel. Now, when you kind of zoom in on that area, right? Imagine now if we do get that reversal, here's that trend line coming down, right? This will look a lot like that same failure pattern. We'll go up, the buyers will try to buy it, and of course, we'll be looking there to sell into that failure, right? So same basic idea as a failure pattern, right, into a pullback pattern off the top of that channel. So those are some good ideas there for us tomorrow as we get that market pulling back. What if we don't pull back? Right? I mean, think about it. What if the market kind of sits here for a while? What if it sits and we wait? What do we do then? Not really much changes at that point. The one thing I do want to be aware of is obviously this channel really gets a lot less useful as we get closer to that range, right? Because, yeah, I can buy with a failure, right, a failure pattern going back into that range. I can buy it underneath the range. But if this was to keep on moving, right, if we're going to keep on going sideways here and then we pull, yeah, see, that's not going to work as well, right? I don't want to trade the middle of the range. That's that pattern right there. Yes, it's off the low of that channel, but no, it's not in a very good location. So we really want to get that deep pullback, get outside of that range, so when I do get that failure, I can take a small amount of risk for a nice big amount of reward. If I don't get that pattern until later on in the session, right, I'm going to really want to try to use those buy zones down here, like I mentioned earlier. You know, forget about the low of that channel. Get it to go lower, right? Get that moving average coming over. Get those sellers to try to sell off of that moving average. Once they do, now we know where their stops are, right? And we're buying into those stops, right? Failure pattern, pullback pattern for that run back higher. Now, speaking of run back higher here, what if the market keeps going higher? Right? What if we keep going higher here? If we keep going higher, this will just be this will basically be a spike in channel, right? So this thing if we just keep on running higher here, okay, we got that measured move waiting up overhead, 58.49. If we keep on moving higher at this point now, we won't worry so much about the range. We'll just worry now about buying really high. And I just don't want to buy that high up here. So what the best plan to do would be is, again, if we do see this market continue going higher here, is still just keep waiting for that deep pullback, right? Get that moving average coming over, get that seller failure off the low, and then up from there. So if we do keep going higher here, that channel still comes into play here. Right? That channel will still be in play. We'll still be looking to buy off of that low. I've still got these support levels down here. So even if we do continue going higher, right, inside of this channel, I have no problem waiting for a pullback on this, right? Patience is definitely one of the hardest parts, but is necessary. So if we do go higher here again, looking for that deep pullback, get that moving average coming down. Sellers will try to sell off of that moving average. Again, let them try to sell it, right? And then of course we'll buy into those stop losses, right, for that rally higher, that failure into that pullback pattern as we go. Now, what would it take to kind of break higher here, right? If the market kind of runs, pulls back, yeah, but what else could we be looking for here as we go higher here? What would a breakout look like? Breakout, 1, 2, 3 breakout. 1, 2, 3. So if we get a real strong move here, real strong move going higher, 1, 2, 3, 1 strong move up, 2 pulls back to the moving average. 3, strong move off the moving average. By the way, that's the same pattern for the reversal. 1, 2, 3 reversal. Same idea there. So 1, 2, 3 breakout. Mark up the high. Mark up that high. Mark up that low. You got it, right? I'm looking to buy off the low of that channel. So those are some 3, right? Kind of 3 directions, right? Up, down, and sideways. Again, stay out of this range. We want to buy it as it comes lower. Seller failures, bull pullbacks on the way back up. If it does run higher, right? If it does run higher, does it run up and pull back? Or do we really jump with that 1, 2, 3 breakout? Last but not least, how do we sell this market? Could I sell it? Right? Could you sell it? Yes. 1, we've got to finish off that measured move. 2, we then need to see what I call a crown reversal. Now, crown reversals are relatively common, right? At major turning points, they become very reliable, right? You're not going to want to take these reversals at every point on a chart, but a major, right? A major level like a measured move, absolutely will look for that crown reversal. First thing is, got to touch that measured move. Got to get that level of resistance, get that objective accomplished for the bulls. Then I want to see a pullback, another attempt to go higher here that fails to make a new higher high and pulls back off again. Now that's going to be the first try here now for those buyers. I'm going to wait now for a second try and look for what I call a trap, right, for a crown reversal. Trap high to sell off that high. Very specific pattern, as you can see. Again, first step is I want to go up, touch that measured move. Second step, I want those buyers to try to do it again, and they're going to fail. Okay, lower high now. Now we pull back. The buyers will come in. They'll try a second time now. At this point now we look for that trap. Just above the high of that first try, right? But not enough to make a new high. Nice strong signal candle. Looking to sell this thing now back down into that trading range, back down to retest the low of that channel. And maybe it turns into a 1, 2, 3 reversal, right? And we're selling off the high of that new hidden channel, right? So it may be a complete reversal. We're looking forward to short off that high. So now we know what the buy side looks like, we know what the sell side looks like, and we're ready to go for tomorrow morning. Again, tomorrow morning, 8 o'clock Eastern time, we'll do it all together in our trade room. Now, before I jump into the S&P, I want to remind you, if you want to get a much deeper dive into all of the entry patterns I'm talking about in tonight's video, I got a free trading course linked up in the upper right-hand corner. As part of that free course, you'll learn all about my 4 favorite entry setups. You'll learn my 3-step strategy. You'll see hundreds of examples of how we use this strategy on our favorite futures markets. Guys, grab that free course. It's linked up in the upper right-hand corner. And don't forget, when you register for the free course, I'm going to email you all the information. So got to make sure you check your email. Make sure you use a real email address. Check your email inbox, because I'm going to send you the first lesson in that free trading course. Check your spam folder if you don't see the email in your inbox. In the meantime, let's keep this party rolling here. Oil is looking good. How about some S&P? S&P is a little, like I said earlier, right, a little bit similar to oil. It is, of course, bullish here, as you can see. Got a bull market running higher here, right, into that range-bound scenario. Now, ranges. What do ranges tell us to do? Buy low, sell high, avoid the middle, right? I want to find levels of support to buy low. I want to find levels of resistance to sell high. And of course, we can easily see with that bull bias, it's a lot like oil, right? I can be relatively aggressive buying low, right? I can be relatively aggressive as I buy low, but I've got to be a little more conservative trying to sell off of that high. And so I've got my trading range here. That trading range, of course, gives me my sell zones overhead. It gives me my buy zones underneath. I want to buy low. I want to sell high. You can also see, though, we've also got some interesting trend lines coming in, right? I've got some basically falling support trend lines. I've got some rising, right? Some rising resistance, right? Kind of call this a In fact, you might want to draw that out even a little bit shallower here. Let's see if we can get that to line up there. Yeah, see, it doesn't line up very well there. That's okay. We know we have a bull market right now. We know we're into that range. I want to buy low. I want to sell high, and I want to avoid that middle. Now, the hardest part about this range is going to be how narrow this range is. Anytime a range is really narrow like this, you've got to be really careful about trading too close to the range itself, because there's not a lot of open space in here, right? Think about it think about it this way. If the range is really small, it's going to be very difficult to convince professional traders, the people who actually move these markets around. It's not going to be easy to convince professionals to participate inside such a narrow trading range. So stay out of the range, buy underneath it, sell up above it. Now, let's talk about the best way to do this. The key is going to be getting outside the range because it's so narrow, right? Because that range is so narrow, get outside the range and then back up in, right? Get outside the range and then back down in, right? Stay away from the middle of that trading range. So that's the key here, right? We're right back in the middle. And what I'm looking at on the S&P right now is we have this real strong move down, right? That strong move down over lunch. Anytime I see a real strong move in one direction, I always expect to see a follow-up leg. And hopefully that follow-up leg will take care of the pendulum swing. The amount of the move above the range is the amount of the move below the range. That is a key level of support, right? You'll notice I'm watching that 67 and change there, right? That'll be a great area of support. So we get that strong move down. I'd love to see another leg finish off that pendulum swing and then back up from there. That would be ideal, right? That would be ideal. So what would that setup look like exactly, right? How would I buy this market? Well, we know the pendulum swing is there. We know we got that strong move down. So let's take one example here. Let's say we do get, right, that follow-up leg, moving average comes over. As you can imagine, the market is bullish overall. So what I'm looking for here is I want to see a seller failure pattern into a bullish pullback pattern. Again, staying out of that range. The hardest part here is going to be staying out of the middle of that range. That will be the hardest part, right? So again, we got that strong move down. I'm expecting to see another leg lower, right? And when it does go lower, moving average comes over. Sellers will try to sell off the moving average, right? That tells me now where their pain point is, where their stop losses will be. It's a failure buying into stop losses. And of course, as long as we're not back in the middle of that range, it's a pullback pattern as a follow-up going back up into that trading range. Now, you might be wondering, what if we get a deeper pullback, right? What if this thing really runs? If it really runs in the pre-market, remember there's that trend line down here, right? There probably is a different trend line here somewhere. It might be something like that or something, right? So there might be a better trend line on here. It's really not that obvious here, right? So maybe it's, yeah, probably not something like that. It's probably something like, yeah, probably something like that, right? Let's say that trend line right there, right? So there's our trend line. Again, it's something. There's something down here. It doesn't really matter, to be honest with you, because we know is if the market tries to make a big run lower, right? Now that momentum will be a big factor here. So again, imagine now we finish off the pendulum swing, right? We get the pendulum swing. Momentum is not that bearish yet, right? Momentum comes over, moving average comes over. Sellers try to sell off it, right? We're buying into that failure, buying that pullback, going back up to retest that high. But what if this thing gets a little bit out of hand, right? What if it really runs as it goes? Now what do we do? Remember, the overall trend is definitely bullish, right? I mean, we are one very bullish market right now. So if this thing pulls back, even a really deep pullback right now, you've got to be thinking buyers are still going to be trying to buy, right? Even if it's a very deep pullback. The problem's going to be is momentum. Momentum is really going to be the problem with we have to deal with here. So if we do get a strong move through and it really runs lower, now we have to assume there's probably going to be some sellers, right, that will try to sell off of these, hidden channels here, things like that. So what I'm going to do is, because I want to be a buyer off the low, it's a range. It's not a bear market yet because they haven't quite completed their 1, 2, 3 reversal yet, right? We'll talk about that in a moment here. What I'm looking for now is a slight variation of the failure pattern, which I call a nested failure pattern, right? Nested patterns are pretty simple. Moving average comes over. I want sellers now trying once, trying twice. Once I get those bears trying twice now I can look for that buy going back higher. So think of it this way, right? Think of it this way. If we get a relatively deep pullback, complete the pendulum swing, momentum is not a huge ordeal at that point. I can look for a buy setup by using a seller failure. However, if this thing really goes lower, right? If it really tanks here now, again, buyers will come in, but we still have to respect the momentum of those sellers. Let them try once to sell it. Let them try twice to sell it. Once I see higher highs, once I see 2 separate tries with clear separation and significance, now I know where stops are, and now I can buy right into those stop losses. So those are 2 things to consider here being a buyer. Now again, as the market goes lower, if this thing goes 1, 2, 3 and holds that pullback, right, holds that pullback and jumps off that, right, off that moving average, well, fine. Now a reversal, mark up that low, mark up that low, mark up that high now. And now, of course, we're looking to sell off the high of that channel. Hopefully that makes sense, right? So again, it all depends on how the market pulls back right now. If it's a relatively shallow pullback, it's a straight failure, right? It's a straight failure into pullback combination here, right? Or does it really dump? Then you've got to think, now 1 try for the bears, 2 try for the bears, and then back up the nested failure. Or does this thing open up in Asia tonight and go 1, 2, 3 and just bolt? Now we know it's bearish, right? Mark up that low. And again, it's got to pull back to that moving average, got to hold off that moving average, because that's what's going to give us the green light that these sellers are actually taking control. Once they do, then we can find our channel, right? And now we're looking to sell off of that channel, right? And we'll put those pieces together tomorrow morning in the trade room once we get there. Now, again, don't forget, stay away from the middle. We don't want to trade the middle. What if the market goes higher here? Can I sell this thing? You can. What was that reversal pattern again? Well, it's actually right here. 1 try, right? 2 try, trap, and go. Remember this from the oil? That's exactly the same pattern right there. What was it called again? It's called a crown reversal, right? A crown reversal. It's a relatively simple pattern, right? So again, I want to see us go up, right? I want the buyers now to try to buy the pullback. They're going to fail to retest the high. I want to see a lower low. Now that lower low, this is where buyers now will come in, and they'll throw the kitchen sink at this one now. And I'm looking for that trap high up above, up above those highs. So again, let the buyers try once to buy it. Let them try twice to buy it, right? Get that trap, drop it back into that range from there. Now, maybe you're shaking your head right now saying, no way, Joe, I don't want to be a seller in this market right now. I want to buy as we go higher. Okay, what's the best way to be a buyer, right, as we go higher? Well, you got to know where they're trying to go, right? You always got to know your exit before your entry. So we know that the 3,000 is probably going to be a pretty easy milestone for us overhead. There are 2 basic patterns I'm looking for to trade a breakout of this range. One of them is the 1, 2, 3 breakout, right? Strong move up, pull back to the moving average, show me some strength off the moving average, then I know I can trust it. Mark up the high, mark up that low, and of course we're buying, right? We're buying off of that low. So again, it's a 1, 2, 3 breakout, 1 strong move up, 2 pull back to the moving average, 3 strong move off the moving average, then we're buying the low of that hidden channel. Where's my target? Up at that big round number at 3,000, and maybe more. We'll know more tomorrow morning once we see more tomorrow morning. What else can we use here? How about a 2 try breakout? Strong, right? That's the key here. Strong move up. If we get a real strong push higher here, that trend line right now becomes our best friend. Okay, that trend line we're drawing off these highs, this trend line becomes our best buddy. So if we can get above the high here, if we push up, this is your crown reversal, 1, 2, right, and back down again. If we can get through that high, it's going to be a 1 try for the bears, a 2 try for the bears, a trap low, and a run higher here. I call this a 2 try breakout. The most important thing is it has to have a very strong run higher. That's the key. If you don't have a strong run higher, you're not going to be able to recruit enough buyers to give this a very reliable setup here for you, right? And I definitely do not want to be taking that trade underneath that trend line, right? I want to be using that trend line as support, not as resistance. And again, I'm looking for that trap on this because that 3,000, we assume that's where they're trying to go with this, up around those highs. So the S&P is a little bit, there's a lot to consider here on the S&P, but the bottom line right now is I want to buy low using failure patterns. I want to sell high using that reversal pattern. I'm open-minded to a reversal if we get it. I'm also open-minded to a breakout if we get it as well. Now, over in the Nasdaq here, Nasdaq is in a very similar situation, right, to the E-mini S&P. We know we're bullish. We got that big bull run higher. We've got that trading range right in the middle. This is not nearly as tight and narrow as the S&P is. So we do want to avoid the middle. We don't want to buy in the middle of this range here, right? So buy low, sell high, avoid that middle, right? Buy low, sell high, avoid the middle. And of course, very, very similar here now to the S&P. We've got that strong move down. I'm expecting to see another leg lower. Now, once we get that second leg lower, we look for that failure into that pullback, back up to retest the high. Very, very similar pattern to what we just talked about on the S&P. Right, expecting that second leg lower here once we get, again, 1 and 2. Once we get that second leg going lower, now we can set things up for our failure into our pullback pattern going higher there. What if we really dump? What if the market really dumps lower here? What can we do? How do we buy that one? Nested, right? If it really runs lower, it's a 1. It's a 2, 1 try for the bears, 2 try for the bears. Now we know where their pain points are, and now we're buying into their stop losses. Remember though, right? Remember, if it really pulls back and holds, 1, 2, 3, that's a reversal. Mark up that low, mark up that low, mark up that high, right? You get the point there. We're selling off of that high with that hidden channel pullback. That 1, 2, 3 reversal, right? So again, right now we know we're overall bullish, but if it 1, 2, 3 breakout, 1, 2, 3 reversal, I'm going to mark up that low, mark up that low, use that, right? Use that trend line to find that high, and then we're selling off of that high here, right? We're selling off of that high. So relatively easy. Again, it all depends on the pullback, right? Shallow pullback is a failure into a pullback combination, right? Deep pullback, right? Is that nested 1, 2 and back up, or that reversal and we're selling off the high of that, right, of that channel. And again, I'm just simply drawing these up on the charts right now. If you want to see hundreds of examples of these setups on our favorite futures markets, make sure you grab that free trading course. It's linked up in the upper right-hand corner. I'll also put a big red button for it right below the video tonight on our trading blog. Now, what if we don't pull back? What if we run back up into that range? Then what do? We sit on hands. We don't want to trade the middle. So if we don't get that pullback, that failure to buy back up again, if we do run right back into that range, stay patient, wait for that failure. If we go back into that range again, remember, ranges tell us to buy low, sell high, avoid the middle. Wait for the market now to make a run going lower. Get that moving average coming over. Let those sellers try to sell off the moving average. When they do, I'm looking to be a buyer right into those stop losses to rally back up into that range again. As we go higher here, right? As we go higher, what are some options as we go? Well, again, if we go higher here, I can't even think about being a seller in this market unless we see that crown reversal, right? That one, that two, that crown, because we will be very bullish at that time. Let those buyers try once, let them try twice, and we can sell off those highs back down, into that trading range. What's a breakout look like? Breakout, 1, 2, 3, breakout, right? Mark up that high, mark up that high, mark up that low. That becomes our new 1, 2, 3 breakout. That one's relatively easy. The hard one's going to be actually getting enough momentum here, pushing through this trend line to get that, right, that 2-try breakout. We're going to have to go up. You know, and if we really, if we really push strong here, right? If we really push strong here, you could probably justify a little trap low here with a 2-try breakout. But I'll tell you, you're really playing with a very dangerous area to be taking that trade, right? So there is potential, if this thing was to really race higher, there is potential you could look at it as a 2-try breakout. What I really would rather see, though, is I'd rather get us up above that trend line, right? And use that, obviously, here, right? Let those bears try once, let them try twice, and we can buy into that failure. And again, to be a 2-try, right, breakout pattern. Target overhead at that point now, we're starting to look at that 8,000 number here on the Nasdaq. Doesn't look like that's going to be the case for tomorrow. Looks like that 7,900 will probably be where we end up. But you know, again, anything is possible here on these markets this week, especially with some of the big news coming later on this week. So Nasdaq is pretty straightforward, very similar here to the S&P, right? Get that strong move down, expecting that second leg. With that second leg completed, I'm looking for that failure pattern, right, into pullback, and then back up we go. Failure pattern, pullback pattern, and running back up into that trading range. If it really gets strong as it goes, it's a nested 1, 2, and back up. Or, right, maybe it holds, right? Maybe it 1, 2, 3 and holds off that moving average. Mark up that low, mark up the new channel, and we're selling off the high of that channel, right? Or we go back up in, stay away from that middle, 1 try, 2 try, failure pattern below the low of that trading range, or 1, 2, 3. Remember, the key is strong move off of that breakout, mark up that high, mark up that low, and we're buying off the low of that channel. The hard one's going to be that 2-try breakout until we get some more information tomorrow morning at the opening bell. And again, don't forget, grab that free course in the upper right hand corner or linked up below the video tonight here on the blog. Let's keep going over to the gold here right now. Gold's relatively simple and straightforward. It's overall bearish. You can see here, overall bearish right now. We got some big trend lines, right, coming in off the lows, coming in off the highs. This is kind of par for the course when it comes to gold. Gold is definitely a market that likes to use these wedges. And once you pick up on a wedge, the most important thing to keep in mind about a wedge is that, 1, you want to go in the direction of that wedge. 2, where the two trend lines come together is a major target. In a bear wedge, it's a major level of support, and you don't want to get caught selling into that level of support. But the big thing about a wedge is as it gets narrower, right? As it starts getting narrower, you're going to start seeing fewer and fewer people start to trade this market, right? What's going to happen is as this wedge gets narrower, nobody's going to want to participate in such a small, tight place, right? Like a little one-bedroom apartment or a little studio apartment in downtown New York, right? It's cramped, and nobody's going to want to take any trades in there because there's not going to be enough profit potential on that move. So my goal with this is once I see it start to get into that real tight area, and we're almost there on gold right now, once we get there, I want to start looking for a breakout so I can take a small amount of risk for a small amount of reward. The same thing does go to the opposite side too, right? Break down, you can buy it back up. These are quite reliable reversals, except, as you can imagine, we need the right entry pattern. So, you know, if you've been following along so far, if you watched the video here so far, the key obviously is, as we go higher, I want to find a level of resistance overhead, right? Maybe a prior swing like that. I want to let the market try to go higher, get the moving average coming over. You got it, right? Get those buyers trying to buy off of it, and we can sell into their failure. Look for a failure pattern to sell up above the top of that triangle, right? The top of that wedge, as we call it. As the market goes lower, right, now what I want to do is look for that reversal pattern. What was it called again? It's called a crown reversal, right? Yeah, crown reversal. It's a move lower, it's a higher low followed by a lower low trap, right? Sellers will try once, sellers will try twice, and you're going to want that trap on this because you're not going to want to be buying into that trend line, right, coming down overhead. You want that little trap low. That trap low will make sure you're safely buying in an area so you're not buying high, right? You're buying as low as you can possibly get there. So now you kind of know the idea, right, behind a wedge. First of all, I'll go with the direction of the wedge. That's the bias, right, is bearish. Be careful selling into what's called the vertex, where it all comes together. And again, the biggest, kind of the most important part of a wedge is when it starts getting narrow down here, expect to see a breakout and expect that breakout to come back into that wedge eventually. Okay, so you'll notice here right now I've marked up one leg, two legs down. I've got this in here as a measured move, so that's going to be good. Here's my trend line coming in. Here's my trend line coming in. We're starting to get a little bit nervous, right? We're starting to get a little bit narrow here now, and a lot of people are probably not going to want to trade right in the middle of this range. So really at this point now, right, I've got my support area below, my resistance area overhead. It is really the same stuff as we just talked about here. I'm waiting for, right, I want to see this market. And again, right, there may be some small opportunities here inside of the wedge. Just be careful. This is it really all depends on kind of how this thing sets up. There might be one more potential setup off the high of that, right? And see what's happening? We go up. The buyers try to buy the pullback. They fail. And the market collapses back down, right? We go up, the buyers try to buy the pullback, they fail, and it collapses back down. So we're going to keep doing that same thing until this thing gets too narrow, right? So if we do go up, top of that wedge, moving average comes over, let the buyers sort of buy that pullback, right? Let them try to buy that pullback like we've seen them do so far so many times this week here or this month here so far, right? Let them buy that pullback. Then we know where their stops are. I'm never trying to pick a top, right? I'm never trying to pick, right, and sell at the highest possible price. That's a fool's game. You don't want to try to pick that top. You want to let those buyers give you the opportunity now to sell into those stop losses, right? So selling into their stops, and then of course, right, again, selling into that pullback. Now the pullback pattern may not give you enough room. It all depends on how much space we have there, but you definitely want to be selling off top of that wedge, getting in as close to the high of that wedge as possible. Ideally, I want to see us go up, get this moving average coming over, right? Get outside the wedge, get the buyers to try to buy off that pullback. Now we know where their stops are. We can sell into those stops. We can wait and sell on that pullback for that run going back down to retest the low of that wedge, and possibly all the way down to that measured move and that big round number at 1500. Now, where things will get a little bit more confusing here is if the market really jumps, right? If it really jumps, what you want to do is you want to let those buyers try once, try twice, and then sell into it, right? Again, because even though we're bearish, with that much momentum, right? I would say if we end up above this high at 23.9, you're going to want to let those buyers try once, let them try twice, then we look for that nice signal candle, right? And we'll sell it back down from there. So again, there are really three spots here. One is the shallow, right, off the high of that wedge. The other would be a pull back up. Buyers come in off the moving average. They try, they fail. That will definitely be something we're watching for here tomorrow. Failure pattern into pullback pattern going lower. Or if it really jumps, it's a nested, right? 1 and 2. And again, you want to see buyers 1, buyers 2, and then we can sell into their stops once we get it. Remember, it's all about momentum. If momentum is really strong as we go higher, just because the overall momentum is bearish does not mean the buyers aren't going to try, right? They're going to try a couple times actually, and we won't be waiting for that second try to sell that sucker back down into that trading range. Now, a breakout, right? How do you be a buyer in this market right now? Being a buyer, 1, 2, 3, breakout. Remember, strong move up, pull back to the moving average, right? Strong move off the moving average. Mark up that high, mark up that high, mark the channel. Now you know where your sweet spot is, and we're buying off the low of that channel. And again, imagine the low of that channel. It's almost always going to be a failure, right? A failure into a pullback combination coming off of that channel. So imagine kind of zooming in on that area back here, right? Kind of zoom in on that area, and that's exactly what you're looking for. All right, guys? Now, how about a buy side as it goes lower, right? As it goes lower, I do like these patterns, reversals off of overshoots of a wedge, excuse me, right? So we go lower here, get that measured move, right? 1 leg, 2 leg, right? Get that measured move down there, get that big round number hit, accomplish what their mission is, then it's a 1, it's a 2, yep, a trap, and we'll go from there. Nice crown reversal. Remember, you don't want to take crown reversals off everything, right? You got to be selective. But when you get a measured move just below a big round number and underneath a wedge, come on, that's a silver platter right there for a nice reversal off of that low. Just again, don't try to pick a bottom, right? I'm not trying to pick that absolute bottom. Stop trying to pick bottoms and wait for more reliable setups when you've got the other side of the market roped in. Right? It's very difficult to predict how far that market will keep going lower. And it's very difficult to use a small stop loss when you're trying to pick bottoms. So rather than trying to pick that bottom, just wait for those sellers to try a couple times. Get those sellers to take the bait. Let them wrap the rope right around their neck. And once we see a couple good candles, right, that thing's going to fail. It'll slingshot right back up again. Nice, easy profit for those buyers on the opposite side, right? Let the sellers commit to their positions, right? And it's almost like martial arts, right? It's almost like jiu-jitsu or karate, right, where you use the opponent's body weight, right, for your own benefit. You use your opponent's momentum against them. Use the seller's momentum against them, but you got to wait patiently for it, right? You got to wait patiently for it. All right, so that's your crown reversal. As we go higher again, right, we get the 1, 2, 3 going higher. What about a breakdown? Yeah, breakdown, right? 1, 2, 3, fine by me. Mark up that low, mark up that low, mark your channel, and now we're looking to sell off the top of that channel. Now, there's one thing I'm worried about, and that is that 1488 area. That is a major, major low. So I definitely don't want to sell into that 1488. I want to get into it short before we get there, right, if at all possible. And obviously, we'll be able to iron more of this stuff out tomorrow morning, right, in our trade room. But good heads up, though, on that wedge there on gold. And, of course, last but not least here tonight, is that mighty euro. Euro, I think, is going to be the hardest out of all of these. There's a lot of moving pieces on this chart right now. The most important thing, though, about this euro is we are overall bullish. You can see here that big bull run last week, right, into what really is just a very small, narrow trading range. And with that really narrow range, we know we want to buy low, want to sell high, and want to avoid the middle. Now, the hardest part is, the easy part is, I've got my range, I've got my resistance area, I've got my support area, so we can definitely see where I want to buy. I know where I want to sell. That's the easy part. The hard part is, as we go kind of zooming in now that you see the bigger picture here, you can see this is a very bullish short-term move, right, on this euro. Now, like I mentioned earlier, just because it's a range does not mean the buyers are not going to at least try. And so one thing I always like to do whenever I'm trying to buy low or sell high is I try to think about where would be a good area where I could kind of catch the traders on the wrong side of the market. So for example here, right, I want to be a seller back into that range, but I've got this big bullishness going higher here. So let's put our minds to work here and think, if I was a buyer, where would I be looking to buy? And then let's try to see if I can get them to fail there and sell into their failures. Now, this obviously comes with the territory of having some experience because, you know, once you've been around the block a couple times, you know, for example, if this is a bullish market right now, well, it is a bull market, it's a range market though. If this was a trending market, I would be looking for this as a hidden channel. And I'd be looking at this as kind of like a midline right in the middle, right? And we'd be trying to buy off the low of that channel. So I'm anticipating buyers are going to be trying to buy off that low. I also know it's a range. I also know we got the ECB on Thursday, and something tells me we're going to probably get pretty comfortable inside that range before that announcement comes out on Thursday morning. So my goal is to try to anticipate, where can I catch these buyers buying at the top of a range-bound market? Because again, overall, right, it is range-bound. So I definitely don't want to be a buyer here too aggressively. I want to be a seller, but I have to, got to respect, right, those buyers. So I find my channel. Sorry about that. I find my channel. I'm drawing off the highs first, down to the lows. That fits way too well not to take it seriously. And what I'm honestly looking for right now is I want to see kind of that crown reversal, right? I want to be a seller, but we're so bullish. So what's the best way to sell in a bull market? Let those buyers try once. You got it, right? Let them try once. Let them try twice. Coming off of, I really want to use the low of that channel. Let those buyers now try once. Let them try twice. Then we can be a seller. Then we can be a seller going back down into that trading range. Hopefully that makes sense, right? Hopefully that makes sense, because that's going to be the most reliable way for us to sell it, because I really don't want to sell this pullback, right? I really don't want to sell that pullback. That pullback right there has potential to fail and run higher. The only problem, though, is it's a horrible place to be a buyer right now. I like the buy side. It's got great momentum, but a horrible location up around these highs to be a buyer. So my plan is look for that crown reversal, right? Look for that crown reversal. Again, I want to see buyers trying once, lower low, trying twice. Give me that trap, and we'll just sell the sucker right back down into that trading range. Now, what if I'm wrong about this, right? What if the market runs higher here? If it runs higher, it really all depends on what it runs to. If it runs up to the trend line, I'm still looking for the crown reversal. 1, 2, right, and back down again. I'm still trying to short off this high. But if they run 1, 2, 3 and go, well, now we have a 1, 2, 3 breakout, right? Now we got that breakout we need. Mark up that high, mark up the high here, find that channel. And where's my target going to be? My target's pretty easy. My target's back up to retest this major high from late last week, right? Last Thursday. So retesting that major high there, right, as we go. Now, what if we drop back down inside this range again, right? What if we drop back inside that range? Well, now momentum shift for the bears now. Okay, so if we end up just collapsing back inside that range, now all we need is a 1 try, 2 try, a buyer failure, and we can sell back down, right? So if we do collapse back down and start going sideways again, now we're bearish back into a range. Now all I need is a buyer failure here, right? And I can sell off the top of that range. Maybe we get lucky and use the underbelly, right, of that channel, right, of that kind of hidden channel there. And then also too, if we collapse back down, okay, a couple things to keep in mind, right? If we run back into the range here, we run back down to the range, we start going sideways, we make a run lower. What is that? That's a range-bound market. You're underneath the range. We want to be a buyer. How do we buy it? Failure pattern, right? Failure pattern. Let the sellers try to sell off the moving average. We're buying into their failure pattern, right? We're buying right into those stop losses. Okay, these are very, very common in range-bound markets. But don't forget, though, if this thing really tumbles, right, if it really runs, okay, it doesn't just go back into the range and settle back in. It really tumbles. When it really tumbles, now you're thinking nested. Exactly. 1 try, 2 try. Again, just because we're at the bottom of the range doesn't mean sellers aren't going to give it the old college try, right? They're going to give it a couple tries there. Let those sellers try a couple times. Let them try once. Let them try twice. Then we know where the sweet spot is, and we're buying right into those stop losses. Does that make sense, guys? Right? That's a relatively simple idea, right? If it sticks inside the range, that absorbs the momentum. Then it's simple failure into pullback back up, right? But if it collapses, then it's nested, right? Nested. Now, you could also go nested into pullback. Again, just make sure that pullback isn't putting you inside the range, right? That's the key. Make sure that pullback pattern keeps you outside of that range. So that's the trick there for that euro. Now, the one thing, again, we got that ECB announcement on Thursday. So if euro is slow here tomorrow, be aware. That's why. Don't force it. And as always, guys, we're just prepping these charts up tonight on the video. Tomorrow, 8 o'clock Eastern time, we'll get together in our trade room, and we're going to execute this strategy together because, guys, don't forget, the strategy is pretty easy to learn. What's not so easy is applying this strategy to a real-time market, and that's exactly why we get together every morning in our trade room, and we execute the plan together. That way you don't have to worry about losing a lot of money like most rookies do when they're rookies, right? When I was a rookie, I lost my shirt making all the classic rookie mistakes. When you trade it with me every morning, you're not going to make those rookie mistakes. We'll use our checklist. We'll use our flashcards. We'll make sure we follow the rules together, right, as we execute that 3-step strategy. Don't forget, you can get registered right below the video tonight. Grab that advanced course. The advanced course includes our beginner, intermediate, and advanced classes, all the tools, all the indicators, all the cheat sheets and checklists, and of course our daily trade room every morning at 8 o'clock Eastern time. You can learn more about that membership package on our website right below me. If you're on the blog right now, there's buttons below the video on the blog. If you're on YouTube, everything's linked up in the description of the YouTube video. And don't forget, if you're not ready yet for membership, grab that free trial. The free trial, of course, includes your free trading course, your free pass to our trade room, and of course, hundreds of hours of how we apply this strategy to our favorite futures markets. Don't forget, when you register for the free trial, I'm going to email you that first lesson. So you got to check your inbox, check your spam folder. Sometimes those emails get stuck in your spam filter, and I don't want you to miss the good stuff there. Guys and gals, great job today. Had a great morning this morning in the trade room. Looking forward to another great day tomorrow with you guys in our trade room. In the meantime, though, rest up. Enjoy the Monday Night Football. Football's back. Boy, great to see that back on TV this weekend. Hope you guys have a great weekend out there. Tomorrow morning, though, 8 o'clock Eastern time. Be ready tomorrow morning, 8 o'clock at the opening bell. If not, come back and see us again tomorrow night on the next edition of this nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.